Hey, good morning. Let's go over today's trade plan. So in the overnight session, the buy side has continued to be more active, and heading into the open, the market is at a important short-term inflection point here at 58 to 60. So how ES responds to 58 to 60 and the 52 to 54 half area is really going to help set the bias and tone for the day. If the overnight session bullishness continues to be in play, and we are seeing broad market strength and sustained upside momentum, then the door is open for a breakout above 58 to 60, and that would confirm the buyers in control, and a sustained breakout beyond 58 to 60 would bring the 67 to 69.5 resistance area into play. But we have to understand that 58 to 60 is a inflection point, and that means that the market can still technically fail at this initial resistance zone. And in the event of a failure and a break below 52 to 54 half, we could start to see some more selling come into the market, at least down into 42 half to 45. And in the event that we break the initial support zone and start taking out the previous day's low, that would then serve as a confirmation that the sellers are dominant and in control, and ES could easily then go down and tag the 36 to 37 half area with the open gap and the naked VPOC there. And at that point, we will have to be cautious on taking long setups. It's one thing if the market is very exhausted into a zone, but just the break below the 42 half to 45 and below 39 half would serve as a signal that the sellers are dominant. And even though we may get a reaction at 36 to 37 half, if we're heading down on broad market weakness and sustained downside momentum, then even 27 to 29 half could at that point come into play. Now, that's not the expectation given yesterday's strong rejection and the short-term strength that we've seen in the overnight session, but in the event that the market does start breaking lower, it's something we have to be prepared for. So by default, we are going to give buyers the benefit of the doubt, but like I said, the market is at resistance, and this is a short-term inflection point, so we just have to see how ES responds to the 57 high volume node, to the 5860 resistance. Either we're going to break out beyond here and then perhaps tag 67.69.5 and balance at higher prices, or the market can fail and we can continue to balance within yesterday's range, and in the event that we're seeing broad market weakness and a lot of sustained downside momentum, then there would be a possibility to even go down and tag the naked VPOC and open gap at 36 and 36.25. So that is how the market is set up in terms of the econ reports. We don't really have a whole lot going on this morning, but we do have the FOMC minutes out at 1 p.m. Central Time, and that could be at least a small catalyst on the day time frame and something to be aware of. So those are the main ideas heading into the open. Let's see how the S&P responds to the 57 HVN and the 58 to 60 initial resistance, and we'll take it from there.